Hey guys, so in today's video, I'm going to be teaching you a super simple crypto trading strategy that you can use to make anywhere between $1,000 to $2,000 every single day. So in this video, I'm going to tell you exactly what you need to look for with a few trade examples so that you can go and start taking these trades yourself. So we have to understand, I hope you guys know exactly how to utilize these futures trading platforms such as Binance, KuCoin, Bybit. If you don't, then let me know in the comment section and I can make a video on exactly how to use futures, how to play with margin, how to play with leverage. So if you want me to make that video, let me know in the comment section below. But without further ado, let's get straight into this video. So essentially what we're going to be doing in this trading strategy is understanding where we are in terms of the trend. So we're going to do that by utilizing a 200 period EMA. So let's say, for example, this is the 200 period EMA and price is above the 200 period EMA. This means we are bullish. Therefore, essentially what we're going to be looking for is a retracement, and then we're going to get in on the retracement of that candle and we're going to ride the wave. So we're going to identify that we are in a bullish trend. We're then going to identify the low of the bullish candle, such as this, and we're going to identify the high of that bullish candle. We're then going to wait for price to retrace back into and break below the low of that bullish candle. So we want to see something like this. When we see a retracement down and we see a bearish red candle, we're then going to drop down to the 5 minute. And on the 5 minute, once we've broken below this low of the bullish candle, we're going to wait for a market structure shift. Then we're going to take our entry at an inefficiency and we're going to ride it to the top of that bullish candle. So it's nice and simple. We're literally going to be trading with the trend, identifying the high and the low of this candle, waiting for a break below that candle, dropping down to the lower time frames to identify a market structure shift. And that is as simple as it gets. So let me give you an example so that you guys can understand exactly what I'm talking about. So coming up to the hourly, we can very clearly see that we are bullish. So let's add on a exponential moving average as well. Change the settings, inputs, change the length to 200. So once we change it to 200, this is now just going to tell us where we are in terms of the trend. So if price is above, we're going to look for buys. If price is below, then we're going to look for sells. So at the moment, we are bullish. We're above the 200 period EMA. So as I said, all we're simply going to be doing is taking the high of this bullish candle and the low of this bullish candle, and we're going to mark it out and wait to see if we get a sweep below. So now let's go down to the 5 minute and let's see if we actually break below this candle. Remember that it doesn't have to go below this candle, right? All we're simply waiting for is to see if it does. And it does. Guys, check this out. So we've just had one of the members in the VIP group who joined less than 2 weeks ago. He just sent me a message and he said he's been in the VIP group for just under 2 weeks and he's already passed his funded account with TopStep and he's requesting a payout for $2,000. He's already made 10 times the money he paid to join the VIP group in less than 2 weeks. If you guys want to learn in depth about exactly how to trade the markets, get my full A to Z trading course, get my daily live setups, my live trading in the futures market, and everything that I teach on YouTube, but amplified by 10 times more, then I highly recommend you guys click that link down in the description and you become part of the VIP group and I'll teach you everything I know in there. So now that we've had a sweep below that low, what we're going to wait for is a market structure shift. Now, market structure shift is essentially going to be telling us that the market wants to go from being bearish to being bullish. And that signifies that we are correctly identifying the trend. So at the moment, we can identify that this is a lower low, lower high, and a lower low. Therefore, in order for us to get that market structure shift, we need to break above this high right here. So if I continue to play price on, we can see that eventually we end up getting a market structure shift right there. So let's recap as to what has happened. We've had a lower low, lower high, lower low. So once we broke above this lower high right here, the price put in a higher high. Now a higher high tells us that we've shifted from a bearish structure point to a bullish structure point. Therefore, we can now safely take an entry with the assumption that price is looking to go higher. So what gave us that market structure shift? Well, as we can see right here, we've got this bullish fair value gap, this inefficiency that was caused by the market because there was so much volume coming out of this move that it left a massive gap. Now with gaps, we know that price likes to fill them. So we're going to take our entry at the open and we're going to put our stops just below that low. So this is a 1.5 stop loss. Now, if you're losing 10x leverage, that's going to be a 15% stop loss. So I'm sure you can work out exactly how much margin you need, how much leverage to trade with. Again, if you guys don't understand, let me know in the comment section below. But having said that, we're now going to target the top of that hourly candle. And once we've done all of that, we're simply going to play price on. And as we can see, price does chop away, come and give us that beautiful entry straight in, and then it runs straight to our take profit. So this was a take profit for 1.9%, which means if you were again using 10x leverage, that's 19%. So just to give you some quick maths, let's say you're using $1,000 as your margin. So you've entered this trade with $1,000 margin and you're using 10x leverage. That means that this trade, which hit TP for 1.9%, you're going to make 19%. Therefore, 19% of 1,000 is $190. So you've just made $190, and this trade essentially only took you from the point you entered to your TP around 1 hour and 50 minutes. Now, again, this is the maths with only using $1,000. If you're using, let's say, for example, $10,000, then everything is just multiplied and you've just made $1,900. Right? So it all depends on how much you're trading with. If you're trading with lesser margin, then of course you're going to be making a little bit less, but there's loads of ways to play around with it. You can use maybe 20x leverage. So now instead of 190, you're going to be making 380. Right? But you haven't changed how much margin you've put in. You've only changed your leverage. So you've made 380 instead of 190. Now, I know that can be a little bit confusing, and I know not a lot of people on YouTube teach you exactly how to work out your margin, your leverage on trading futures. So if that is something that you guys are interested in, then let me know and I can make a video on that. But that is, in essence, the simple way of trading this strategy. So let me give you another example really quickly. Again, we have to first understand where we are in terms of our trend, and we do that by seeing where price is in relation to the EMA. And at the moment, we are above the EMA, telling us that we are bullish. Therefore, what we're going to do is identify the high of this bullish candle, and then we're going to identify the low of this bullish candle. And as I said, all we're simply doing is waiting for price to come and sweep the low in a bullish structure to then take price higher. It would be the flip side. If it was bearish, we'd be waiting for price to sweep the high. So in this example, what we can start to see is that if we had this candle marked out, for instance, price never went and swept the low. So we would then simply move on to the next candle. So then we would move on to this candle, such as this, and we can see that price never came back and it didn't sweep the low first. So we would then leave that candle alone and move on to the next candle, and the next candle would be up here. So this is the high, this is the low, and again, as we can see, price never came back down to sweep the low. So we're going to get rid of these candles, and now we've ended up marking out this candle, and again, we're simply just going to wait to see if price actually comes and sweeps the low. So we drop down to our entry time frame, which is the 5 minute, and then we play price on, and we can see that price then does come down and sweep the low. So now that we've swept the low, what we're going to do is wait for a market structure shift. So let's identify our structure really quickly. We've got lower low, lower high, lower low, lower high, lower low. Therefore, we need to break above this lower high right here in order for it to signify that the markets have changed from bearish to bullish. So we're going to mark this out just like this. And now, again, we play price on, and we can see that eventually we get a bullish market structure shift slug like that. So now that we've had this bullish market structure shift, I'm going to look for our entry. And as we can see all the way at the bottom here, we do have this inefficiency. However, it wasn't this inefficiency that caused the market structure shift, because after this, we had this choppy price action, lots of wicks, and then eventually price went up and gave us that market structure shift. So yes, we can take our entry down here. However, the likelihood of this fair value gap being used for price to go higher is a little bit slim. So what we're going to do is drop down to the 1 minute, and now we're going to identify the order block which gave us that market structure shift. And as we can see right here, we do have this beautiful order block. We're going to remove this fair value gap. And this order block is what actually gave us that market structure shift. So we're going to take our entry at the open, put our stops just below that low right there, and we're going to target the high of that candle. So if I now play price on, we can see that price comes back, taps us into that order block, and then eventually after a while it does go to our take profit. So again, that was a nice and simple trade. We just had to understand that the inefficiency was way too low all the way at the bottom, and it wasn't the one that actually caused the market structure shift. It was this order block, which price then came back and respected, and then we had this bullish move out. Now, again, let's do the maths on this one. If we understand that this, and in 3, 2, 1. So the take profit on this trade was 64%. So using the same numbers again, let's say you're trading with $1,000 of margin and you're using that with 10x leverage. So with $1,000 of margin and 10x leverage, your 0.64% TP ends up being 6.4%. So now 6.4% of $1,000 is $64. So in this trade, you've ended up making $64 with $1,000 of margin. Now, let's say you change this to 20x leverage. Well, now you've made $128, right? Let's say you're trading with $10,000 of margin. You've now turned this into 640, and you've now turned this into $1,280. So you can see how playing around with the leverage and playing around with the margin is going to give you very different results. So at the end of the day, what you have to remember is that learning a skill such as trading is not going to pay you dividends at the very beginning because you're not going to have all that much money to trade with. However, in the long term, once you've understood your skill, once you've understood exactly how to trade and you're consistent with it, then you can start to up your margin. Maybe you can go to a prop firm, or there's so many different avenues that you can take in order to start making more money. But at the beginning, you have to make sure you understand that you are going to make a little bit less money at the beginning, but in the long term is always going to pay you that dividends. So I hope you guys enjoyed this video. And if you did, don't forget to leave a like, comment, and subscribe. But on that note, I'll catch you guys in the next video.